72 minutes have passed since the 8:30 a.m. economic report was released. And by 9:42, the silver market is still trying to decide what those numbers actually mean. Within the first 8 minutes after a major labor report, precious metals often make their first reaction move as traders compare the data against forecasts and prior readings. But the full reaction almost never finishes that quickly, because the market usually spends the next 45 to 90 minutes recalculating expectations for interest rates, economic growth, and inflation. First, I will show you how a report released at 8:30 a.m. can trigger multiple waves of price movement before 10 a.m. even arrives. Next, I will break down how the market digests labor data, adjusts interest rate expectations, and then repositions across metals. And stick with me all the way until the end, because I'm going to explain to you how silver often reacts in stages. Almost nobody is noticing that the most important reaction window today may extend nearly 110 minutes, from the 8:30 release all the way to the next data point at 10 a.m. Lean into this part. It's important, because history shows how quickly silver can react to these reports. On February 2nd, 2024, when the U.S. employment report showed 353,000 new jobs, far above expectations near 185,000, silver dropped from roughly $23.06 to $22.61 within about 14 minutes after the 8:30 a.m. release. That was a move of about 45 cents per ounce, or nearly 2%, and it happened before most retail investors had even finished reading the headline number. Now, this part is critical. A similar reaction occurred on November 3rd, 2023, when the labor report showed 150,000 jobs added, below expectations near 180,000. Within about 11 minutes of the 8:30 a.m. announcement, silver jumped from roughly $22.69 to $23.18, a gain of approximately 49 cents per ounce, as traders interpreted the softer labor data as reducing pressure for higher interest rates. Keep this top of mind, because most people are missing this point. Silver rarely reacts to just one number inside the report. The employment release contains several signals at once: job creation, unemployment, and wage growth. Traders may initially react to the headline payroll number within the first 5 to 10 minutes, but the deeper market reaction often develops between 30 and 70 minutes after the release, as analysts interpret the full data set. Pay very close attention to what I'm about to say. At the top of this video, I told you I was going to show you how a report released at 8:30 a.m. can trigger multiple waves of price movement before 10 a.m. Well, here it is. Markets frequently produce an immediate reaction in the first 10 minutes, a secondary adjustment around 40 to 60 minutes, and then sometimes a third reaction when additional data arrives near 10 a.m. That sequence can create several sharp moves in metals, even when the morning initially appears calm. Don't miss this next point. Even though the employment report has already been released, the market still has another economic report scheduled for 10 o'clock a.m., which means traders could continue adjusting positions for another 18 to 20 minutes from where we are now. In plain English, silver is currently trading inside a critical 90 to 110-minute window, where markets are digesting fresh economic information and deciding whether the outlook for interest rates, inflation, and growth has changed.